Good morning, everyone. This is Marshall Giller bringing you the morning comment for August 26th. As the ECB gives in on monetary policy, the focus of attention is turning to Eurozone fiscal policy. ECB President Draghi Friday entered that debate when he said in his Jackson Hole speech that fiscal policy had an essential role to play in reviving economic activity. Then yesterday, French President Hollande dismissed his government after Economic Minister Arnaud Montebourg lashed out at fiscal austerity as the wrong way to go about fostering growth. If the anti-austerity movement does gain traction, it's hard to say what the impact on the euro might be. Faster growth and higher yields might be euro positive, but rising debt levels and falling credit ratings would be negative. I think a looser fiscal policy is likely to be negative for the euro, at least initially, as investors worry about the loss of discipline, until eventually higher growth might convince them otherwise. Meanwhile, the market continues to adjust its expectations for U.S. rates. The Treasury yield curve is flattening, with longer-dated yields declining and shorter-dated yields rising, the classic pattern that occurs in anticipation of tighter monetary policy. This is a good sign for the dollar. Expectations of Fed tightening are likely to underpin the dollar, which in the past has generally registered strong gains 6 to 9 months before the start of a tightening cycle. Now, as the euro has weakened, Euro Swissy hit a low of 120.72 yesterday before bouncing just slightly. It's the lowest level since the end of 2012. Now, I haven't heard anything about the Swiss National Bank changing its commitment to the 120 floor, and I don't expect to. That means the risk-reward ratio for long Euro-Swiss positions is about as good as it gets right now. Although remember that past performance is no guarantee of future performance. As for today's schedule, Russia's President Putin meets with Ukraine's President Poroshenko and other regional officials. This could be a key event for FX and for gold. There are no major indicators coming out from the Eurozone today. In the UK, the BBA mortgage approvals are expected to have increased in July. From the US, the indicators today are expected to be mixed. The headline durable goods orders figure for July is forecast to be higher, but some of the sub-indices are expected to be lower. 2 house price indices are coming out, and one is expected to show an acceleration in price rises. The other one is slowing. Consumer confidence index for August and the Richmond Fed manufacturing index for the same month are both expected to decline slightly. Overall, these figures are slightly negative, but given the dollar's lack of response yesterday to the disappointing new home sales, the dollar may not be that much affected if today's indicators come in as anticipated. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.